Thanks for joining us once again. We focus today on a trading concept called bulls make money, bears make money, and pigs get slaughtered, as we focus on Tesla and the historic run it's just had and the process of the decline. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, would like some better ideas on investing and trading, please join us on Patreon. As you know, we've been away for a bit for several reasons. One of the biggest is working on sound improvement. We're also in what I called an extremely confused zone. Why am I confused? And I'll explain that as we go forward right now, because I think it's a significant part of the conversation on Tesla. So obviously there's something called the stock market. One of the most famous elements of the stock market is something called the historical PE. So the price earnings ratio is one of the most important numbers that drives the stock market. So let me micro onto what's going with automobiles right now. What you'll notice is there'll be certain companies like a Ford or a GM where their stock price is fairly low, but they have huge amounts of assets and they have a lot of sales. Now, why is that? Well, the reason is that there's a way you calculate the stock price of a company. And the way you do that is you multiply the earnings amount the company has at times the growth rate, and it's called the PE ratio, and that's basically how you figure out the stock price of a company. So if the growth rate is, let's say, at 1 or 2, but they have decent earnings, the stock doesn't go out of business, it just does okay in terms of how high the number is. But basically, the stock price will be stagnant. On the opposite side of that, one could look at something like MicroStrategy as the Bitcoin prices have been rising and how you see that increasing value of the stock, especially now that it's part of the NASDAQ 100. So why do I bring all this up? Quite simply, in the case of Tesla, one of the things that's going on is we don't have any new numbers on the company yet. As you know, there are two components that typically drive what a stock's price is. Number one is going to be the production numbers that come at the end of this month, first day of January. Then the second thing is what's the forecast for that stock going forward. If the answer is there's no growth, then the stock price will fall. If the answer is medium quality growth, the stock price kind of stays around where it is. If for some reason we have things like new robots, possibly FSD, possibly the government buying a lot of Tesla vehicles, there are all these possibilities of things that could pop in that result in a rapid acceleration of the stock price driven by the benefits sort of Elon and Tesla get by his affiliation with the government. So the answer right now is that I have to say I'm completely confused. And the reason is that we know Elon is going to be a big part of the government under President Trump. What we don't know, though, is will Tesla's earnings and revenue increase because of the affiliation with Mr. Trump? Now, here is why I'm completely confused. It turns out that I just got a couple of emails. I get emails at a couple of different email addresses from Tesla. The last 3 emails I've gotten in the last 5 days are really concentrating on how to bump sales and revenue for the end of the year. The most interesting piece I saw, and please take time to send me a note if you're getting this as well and your opinion of it, is that Tesla has now offering lifetime free charging to those who are buying the Model 3. And so I was like, wow, that is a really attractive offer. I'm sort of reminded of this offer because one of the ways that particularly Hyundai, but other manufacturers in Europe are gaining share is by offering 1 or 2 years of free charging up to a certain number for those who are choosing to purchase from certain manufacturers. So perhaps the number one selling car in Europe is the Model Y, and there are no free charging offers being made there. I do want to sidebar segment on this for a second relative to the cost of charging. I just met an Uber driver who drives a Model 3, and I was actually very impressed. He pointed out that at 4 in the morning, 3 in the morning, at a supercharger facility, the per kilowatt hour is 11 cents versus 30 cents if you're filling up during the day. So for those of you who have to charge not far from the charger and might get up early anyway, you might want to consider adjusting your purchase at the supercharger to optimize time to determine, when to get the best deal on that electricity. Because if you don't have a garage, you have to go to plan B, and a nice 20-minute charge saving you money might be a way to do it. So let's segue back. The question that arises is, if sales are strong and are no problem whatsoever, will Tesla heavily discount the charging infrastructure? And the answer I'm coming up with is no. And the further answer I'm coming up with is, therefore, that it's my belief that numbers will be challenging for Tesla in the numbers that will be announced on January 1st. So I next want to ask you guys, particularly because about 25% of my viewership stretches throughout Europe, what are you seeing as you go past or at your dealership or service facility for Tesla? Are you seeing a lot of inventory of cars sitting unsold? Are you seeing an empty lot? Is it half full? What are you seeing? And please take time to just leave a note down before, because there are other Tesla investors that are wondering what's being seen in places other than where they're located. In particular, those of you in California would love to get your input because you're the largest density of sales in the United States for Tesla, and that gives those folks in Europe a sense of what's happening here as well. So next, I wanted to review the fact that I worked for Fisher Investments for a while, and as 30 years ago when I was there, I had a sort of a coworker whose dad had been in the markets for 50 years and introduced her to a concept that said, bears make money, bulls make money, and pigs get slaughtered. So the idea basically, as you can see here, is the fact that if you think a stock is going up, go for it, buy it, and ride it. Once it's gotten to a certain level, you turn into a pig, and that's when you potentially get slaughtered. So the drop from Tesla's stock price up at $490 down now to the 420s and declining, in my mind, is a reflection of how one might apply the logic of that statement. If you can, if it's not tax implications, I think it's a great time to sell out for a while and then buy back in after it's dipped back down. Why? Because you get to retain your profits. A better way to do this, I believe, is something called a put. So if you have a decent amount of shares and you've accrued a nice amount of profit, one way you could do it is perhaps instead of the usual 5% recommended by me, let's do 10 to 15% of your portfolio in puts. Why? For two reasons that I've covered numerous times, and there are many strategies that you could use that work great. Number one, if you buy puts and the stock price goes down, the value of those puts will rise, giving you, in essence, paying you so that as your stock price is falling, you're getting paid on the other side. Very good deal. Another possibility is, what if the stock starts to rise and rise dramatically? Well, you still own the shares. So what will happen is the value of the shares will rise and the value of your puts will fall. And so you basically have what's called a straddle. You're making money regardless of what happens. And I really, really think that you might want to consider that here. Why am I recommending this? Well, usually the stock market, plus or minus 5%, has a way of valuing a company based on its numbers. So if we go back and look at the run Tesla's been on, I thought it was at its apex at $300 a share. Then obviously went 350, 400, busted through 400, heading for $500 a share. Those are awesome. So in my mind, based on my sense of how the market values things, somewhere around $300, $350 max is about the value you could justify on Tesla right now, given certain potential things like FSD is working better, the robots are going to be coming in the next year, year and a half. There are all these things that are occurring that are positive things for the company. So in essence, I'm of the opinion that it's a good company, a good stock, and will do well in the future. It's just that the challenge is they've outkicked the coverage. The price that the stock is at currently is mind-blowing, and I think the percentage chance of a drop is a lot higher than a percentage chance of a rise without new information. So the question then comes up is, when are we going to hear what that information is? Clearly after Mr. Trump is in office and then Tesla's earnings show up end of January, we're going to have new information that we will be working off of. And that's when I expect, us to really understand if this valuation is above expectation, in line, or below. The other thing that's going on right now is what I call desperation. China has a thing going where they're doing huge volumes of EV vehicles that are being produced in China. Some of these things look awesome in terms of what they've designed. But the problem they have is they're having a lot of bankruptcies because they've built too many vehicles. And so Europe has closed that off with high tariffs. There are certain sort of Chinese partners, let's say Peru, for example, that just got a giant port, or Brazil, who's gotten a large investment from China, who will not have restrictions on Chinese vehicles, but that starts to affect the ability of other countries' vehicles to be sold there. So my general thought is that China will sell electric vehicles. They will sell vehicles in other countries, not the US or perhaps Greater Europe. But there are a lot of other places that are willing to buy those vehicles based on a relationship that they have with the Belt and Road Initiative from China. Australia, though, is one place that I think is really fascinating. Australia relies on moving a lot of goods, be it coal, be it wine, and other goods into China. And so therefore, they have no way to put in tariffs that would slow the onslaught of Chinese vehicles, because they rely on a symbiotic trading relationship. So there, the Tesla sales are dropping as you see Chinese vehicles arriving at 50% of the Tesla price. Which brings me further along the lines of my conversation about my feeling that we're a little bit overvalued right now, which is that the, in essence, dumping priced of Chinese vehicles into certain marketplaces slows the growth of Tesla into those areas. So as a result, Tesla can do fine in the major markets, let's say a Japan, a US, a Europe. But in general, it makes it difficult for it to win in places where the competition is half the cost, very similar in quality of what's being delivered. So I wanted to throw something out to you to consider as a final note today, and that is that I saw a picture of a Lucid vehicle recently, and I was intrigued because they were trying to get you to do test drives, et cetera, and they chose the route that Tesla did with producing sort of the body equivalent of a Model S, and the exception in the case of Lucid is they're going 600 miles of range, which is excellent. Every time I see that car right now, I keep thinking of what was said by an owner of a large BMW that I think I met him, but I want to say I saw an interview, and he basically said, look, GPS is nice to have in a car, but if I want to go someplace that's going to need a GPS, I will take a plane or some other means to get there. If it's my regular driving, I know every place that I plan on going, and I'll simply do that in a car, and usually without having to use a GPS, unless I want to pull something up on my phone. So I kind of bring this up because there's a problem that's happening right now, I believe, which is the killer app is to have access to fast charging, and Tesla dominates that space. Other than that, it's hard for other competing firms to deliver differentiations that make them a better alternative than Tesla. So I really think that we could see more market share going to Tesla and hurting the ability of competitors to gain market share, but possibly even stay in business. I still remain amazed right now. Rivian loses $30,000 per vehicle, and they're still in business after the large investment by VW and others. So I would say look for some bankruptcies next year, and this further consolidates the market into Tesla's hands is one of the things I see coming up. We really look forward to your comments of this. I really hope sound is better to your liking. Thanks for taking time to join us. Wanted to wish you a happy holidays. Please take time to like and subscribe, as well as share with us on Patreon if you would. And best of luck. Please do a hedge, save some money. Have a great day. Next, I want to move on to our health tips. I will say that there are a few folks, and I've shared some of the video with you, that are doctors online that I've really been impressed by their work. The biggest thing I'm working on right now is something called eating crunchy things on a daily basis. So there's something called baby carrots, so I keep a bag and I try to go through 4 or 5 a day, but also cucumbers, I want to say other deciduous entities like that. It turns out, as part of maintaining your biome, adding in deciduous fruits and vegetables is an important part of health maintenance. I wanted to encourage you to join me in that. Just a reminder, just don't forget your 25 leg lifts a day. Also wanted to encourage you to take time for a 20-minute walk each morning, all impacting health in a really nice way. Once again, thanks for joining us. This is Greg for Teslafaninsight. Tschüss, au revoir, Hitro, Hoda Hafez, Draisishe, Ni Hao Ma. And in Jamaica, we say, enough respect, walk good. Arrivederci, namaste. And thanks once again for joining us. And your suggestion of show topics, always useful.